Hello and welcome to our next session for our Wealth Building Summit. In just a moment, you're going to be introduced to Kathy Ewers, who is my personal finance or mortgage broker. As mentioned earlier, you need to surround yourself with a great team, and a good finance broker is one of the most important people on your team. They can literally save you tens of thousands, if not hundreds of thousands of dollars over the life of a loan, and they can also help you to build your wealth much faster. And so let's meet the person who I work with right here, right now, Kathy Ewers. Thanks, Kathy, for joining me.
Thank you. Hello, everybody, and thank you for having me.
All right. So very quickly, let's talk about, just to quickly establish a bit of history. When did you start investing yourself? And also, how long have you been a finance or mortgage broker for?
Yes. So I bought my first property at the age of 18, an investment property. It was a small bachelor unit at Kirribilli. And then I met my husband, and we went on for about the next 25 years buying and selling property. And we've done just about everything you can within the property buying market. So we've we've done construction, we've bought and sold, we've started title blocks of units. So we've really loved our investment journey.
And you've been now working in the field for, 18 years, is it?
Almost 18 years, I believe. Yes. I started being a finance broker actually off the back of buying property. So that was my passion. And I learned very early on that to keep building my portfolio, I needed to leverage other people's money, and that was the bank's money. So I decided to become a mortgage broker so that I could learn the ins and outs of how to keep building my portfolio, and also to help other investors build their portfolio as well. And so, I've been very passionate about that.
Okay. Now, we have some amazing finance brokers within the Blueprint community, Kathy being one of them. And also we have a number of them in New Zealand as well. So it's important that you find someone in your country. Most of this is really a national thing, right? So you've got clients from all over Australia.
We're national, so any broker is national. Yep.
Any broker is national. So find someone that you know and trust that can help you. But I just want to quickly establish, why should someone work with a independent finance broker as opposed to going through the front door of one of the kind of big name banks?
Yep. So a mortgage broker basically works as an intermediary between the client and the bank. So if you're walking into a bank, you're really only learning about their products, and they're only going to sell what they've got on offer. So we basically hold your hand throughout the whole process. We've got access to about 30 different lenders, and all brokers do. We all work under an aggregator. We've got all of the major banks, the second-tier banks, the non-conforming banks, who do the low-doc loans, or if you're credit impaired. And then we've also got access to commercial lending and private business lending as well. So a broker, it personally helps you. So basically, if you walk into a bank, they're really not invested in you personally. Their motivation is for the bank at the end of the day.
Selling their products.
Where a broker, you're their main concern, and getting you achieving your goals and your dreams is what we are all about. So,
You shared an analogy before about going to the supermarket.
Yes. So I like to use the analogy of, if you walk into a supermarket, it's like walking into a supermarket and you're only allowed to shop in one aisle. So, if you get what you need in that one aisle, well and good. But if not, and that's what a mortgage broker helps with. We've basically got all the aisles to look at, and a lot of selection of products.
Okay, and how does someone find a good finance or mortgage broker?
Okay, so I would say the number one tip to find a good mortgage broker would be to find someone with experience. There's a lot of different policy in this industry, and if you've got a newbie broker, they can probably fly by the seat of their pants. They've probably got a mentor that they're running back and forth to. But there's so much policy involved now. Every bank now has different rules and regulations of what income they're going to use, different LVRs and different policies that they're going to restrict you on your lending. And so as a broker, it's our job to know all about those restrictions.
So have someone with experience. What else?
Yeah. So I'd say the second thing would be a referral. So obviously if you've had a friend refer a broker to you, then obviously they've had a good experience, and That would be my second tip. Third tip would be, have they walked the walk? So have they bought investment properties? Have they bought more than one property? Have they ever done a construction? So, obviously it's very hard to ask a broker, have they done that? But, I draw on a lot of my experience in investing while I'm looking after other people's loans. So I think that's the third.
Okay, and again, there's some amazing people you can chat to within the Business Blueprint community that you can trust. So just put it out there, talk to members, talk to Kathy and others that are out there. Also, there's a number in New Zealand as well, so chat to them too. Okay, now just quickly explain your process. I know it can be quite involved, and we could probably talk for an hour just about this, but just in 2-3 minutes, walk us through what does someone need to have ready or prepared in order to chat with you. I know you've got this amazing document you've created here, a magalog of your own, and have like 11 steps to lending success. We haven't got time for all the points right now, so just summarize some of the main ones and what's your process?
Yep. Okay. So every broker's process will be pretty similar to what we do. Our first step is basically a client interview. So we either do a video interview or just a phone call with a client. It takes about 15 to 20 minutes. In that client interview, you don't need to have any documents ready. This is really just a get to know me and a get to know you. So you'll have the opportunity to ask any questions if you don't understand how the whole process works, or you're not sure, what you're able to do if you're a first-time buyer. We can answer all those questions. And then that's an opportunity for me to also ask you, what are your goals? What type of property you're looking to purchase? What's your goal purchase price? Whereabouts are you looking to buy? What's your employment? Are you PAYG or self-employed? Do you have lots of entities or one entity? How much savings have you got? Are you looking to buy now, or are you just trying to do a preliminary assessment so that you can plan for the next 12 months? So in that meeting, we really get to know each other, and that's where we decide whether we take it to the next step, step 2. So step 2 is where we would catch up over the phone and complete a fact find. So we knock this off in about 30 minutes to 40 minutes, depending on how complex your situation is. So a fact find, once the fact find's done, we basically know what your income details, your assets, liabilities. Then we will send you an email and ask for preliminary documents. So those preliminary documents are basically financials. If you're an employee, we just need 2 pay stubs. If you're self-employed, we need 2 years tax returns. Once we receive all that information in, we then go to work and do what we call a preliminary lending assessment. And that's basically, we will work out what your maximum lending capacity is. Based off your savings that you've told us, we'll work out then what your maximum purchase price is. Then, now that we know your financials, we can then look at all of the lenders and fit you with the best, say, 3 lenders that we think will provide you what you need. And then we go to those lenders and we get pricing. So we look to get the best variable rate that we can and the best fixed rate. And then we email you with that preliminary assessment. And that basically has our 3 bank recommendations, the best rates that we can get, and your maximum purchase price and lending scenario. Off the back of that, we have another phone call and we discuss it. If you're ready to roll, we start the process of getting the application ready. If you're not, we plan what you might need to do. Do you need another 10K of income? Do you need another 20K of savings? How long is this going to take? So that's a preliminary assessment. That's our main, the main crux of it. Beyond that, there's only a few steps left beyond that to launch a loan.
Yeah, wow. And I think, if I can give you my personal experience, this is something that I wish I did sooner. A lot of people put it off, or they think it's too hard and they don't do it, or they think they have to have everything perfect before they talk to a broker. What would your advice be? When should people contact you in order to, sort of start this process?
I believe that you should reach out as soon as you're thinking about it, because it's really hard to have a conversation with your partner or even to start to look at property yourself unless you have some kind of an indicator of whether you're in the ballpark or in the market yet. So as soon as you start to think about it and it becomes a goal of yours, reach out to a broker, because they will be able to do that preliminary assessment that I just mentioned, and you'll know straight away what your opportunities are or what you need to work towards. And we do have a Be Buy Ready program for first homeowners where we literally say, look, you might need another 10K income. Some of them go and get a part-time job and come back 6 months later, but on top of their full-time job. But just reach out straight away and have a chat to your broker so that they can, answer all the questions that you need answered so that you can make the next decision.
And it can be really motivating when you actually, if it's a yes, great, but if it's a no, then you're going to say, well, here are the 2 or 3 things that you need to work on over the next 6 to 12 months. And once you have these things in place, come back, and then you've actually got something to work towards to help you. So I highly recommend it. I wish I did it sooner. So yeah, just do it.
They do that sooner than you think. Once it's a goal and they know what they need to do, it happens faster than you would.
Absolutely. Okay. So we've spoken a bit about the process, and of course, reach out to Kathy or any other mortgage broker and chat to them. The sooner, the better. I want to quickly, we don't want to spend too much time on this, but talk a bit about current market and where we're at right now. Obviously, there's crazy boom that happened during COVID. So just talk about what happened, kind of at the beginning, what happened during COVID, and what's kind of happening now off the back of COVID, and where are we at with regards to inflation, interest rates. Just give us a kind of like market snapshot in 2 to 3 minutes.
Couple of years snapshot. Okay. All right. So okay, so let's go back to COVID. So once we all realised that we're all going to be okay after COVID and things settled down, the property market just boomed. It literally just took off. And of course, we're involved in the property market because we're doing the lending. So our industry, the finance industry, has just been booming for the last 2 years. So I've had the busiest 2 years out of my 18 that I've ever had during COVID. So it's been amazing. So obviously during COVID, we had really low interest rates. So servicing for a loan was easier. Mind you, the bank does buffer that rate by 3% to make sure if it goes up 3%, you still should be able to afford the loan. So there was a buffer in there. So we had historically low interest rates. We had property prices going through the roof. What else was surging? We had a lot of people that obviously weren't traveling and that were wanting to invest more in Australia. And so we had the first homeowners who had saved money to go over to Europe. They had 50 grand in the bank. I had a lot of those reaching out to me looking to buy property. I even had people that were looking to get married in Bali and Fiji, and instead of spending their 60 grand on the wedding, they postponed it and they were buying property. We also had investors or even homeowners using the amazing equity that they had just accumulated in their home to either roll out and buy another investment property or renovate. So we had a lot of people choosing to renovate their homes, basically pull out equity, put another story on, recarpet, paint. A lot of that was happening during that COVID period. So it has been noted, even with the stats, that it was the highest period of lending for a long time in history for the last COVID years. So what I noticed in October last year was that it started to really cool back and get a lot slower, and clients that were coming to me, especially my first homeowners, can I do this, can I do that? And I was saying, don't service for it now. So, I wasn't having to say that very often, you don't service. It was starting to happen a lot more. You're not servicing because interest rates were going up. It's not actually interest rates were going up, but the living expenses were going up. So the living expenses that we have to declare on your servicing, the bank has a minimum that we can't go below. And so that was going up as well. So interest rates up that. So servicing became a little bit harder. And it slowed down, and everybody was very uncomfortable with the war that was going on and also where interest rates are going. And then literally the day I went back to work, the day after Boxing Day, the phone has not stopped ringing since. It's been ringing off the hook for the last couple of weeks. So
it's in end of December, January. Yep.
So what's my theory of why it was quiet and now it's so busy? I believe that people have become more comfortable with the interest rate rises. At first, they all kind of pulled back and they were very nervous about the whole, of what was happening with the economy. And I believe that they're becoming more comfortable with it. And they've had a few glasses of wine over Christmas with their partner, and they've said, all right, let's get going, let's do X, Y, Z. And they're all, there's a new energy. I felt a new energy in the last couple of weeks in the market.
And it's always a shock when rates go up. But what people got to realize is that in terms of like historically, we still have very low interest rates. My mum and dad talk about the fact that I think, when we were little, it was like 17% or something along those lines. So, if it's going up a little bit more, and it may continue to rise, it's still pretty low compared to what it could be.
So the low interest rates we've had have been obviously, unfounded. And all we're doing now is returning to the mean. So the average interest rate over time, I believe, is about 7%. So we're still well under that. We're still getting home loans in the high fours. So, all we're doing is returning to the mean. And I think more people now are becoming comfortable with that, and lending is starting to become popular again. One of the things that we are looking to do with, because servicing is becoming a little bit harder, is APRA did put a 3% buffer on the interest rate when doing a client's servicing. So they're not servicing you at your actual rate. That's buffered by 3%.
And APRA's like the governing body, right?
Yeah, that's the governing body. In 21, they literally went to all the banks and made them increase their buffer from 2.5% to 3%, to make sure that, because they knew rates would eventually return, that all these people on 2.5% weren't going to get caught. So now the industry is trying to get them to take that buffer back to 2.5% soon. So that would mean lending will become a little bit easier.
So we're kind of in a bit of a soft spot at the moment, and a lot of these property prices have kind of like pulled back in certain places. So what are you seeing for the future in terms of rate rises are probably going to go up? And knowing that, should people be talking to a finance broker sooner and getting like pre-approval, which would last 3 to 6 months?
Yep.
So they're not affected by those rises as much. And then what do you see happening in terms of like the property cycle? Where are we at?
Yep. Okay. So just to give you an idea of how much a rate increase will affect your lending capacity. So a 0.25 increase, which is what we've been seeing pretty much month on month. If you're trying to loan 500,000, 0.25% increase in the rate will affect about 12,000 worth of lending capacity, and for $1 million loan, it will affect about 25,000 worth of lending capacity. So, my advice there is we're pretty certain that it's going to continue. We've got a few more to go. We do believe that it's going to go up about another 0.5 at least, and then I don't know beyond that. I definitely feel we'll have a 0.5. So if you're looking to buy a property and you're ready now, I would be lodging an application as quick as you can, because every time those rates go up, your lending capacity goes down. You do get, once you lodge a loan and you get a pre-approval for a property purchase, the banks will honour that pre-approval for 3 months. So you've got 3 months to try and find a property. And if there's rate increases in those 3 months, it won't impact your loan pre-approval. And even though a loan pre-approval is good for 6 months, Dale, in fact, but after that 3 months, in the back end 3 months of that pre-approval, rate increases will impact your servicing. And so that's where you just need to have really close communication with your broker if you end up buying in the latter half of your pre-approval, just to make sure that you're still servicing for the loan. Don't get caught out that you over purchase or over leverage.
And with regards to property, I know that you're a big investor yourself. What do you think's happening kind of in the market? Where are we at in terms of the cycle, and is now a good time to be investing in property?
Yeah, I mean, I think it's always a good time to invest in property. I don't think there's any bad time. But if I had to have a guess at where we are on the property cycle, and we're looking at a clock, and 12 o'clock is the peak of the market, I think we're at about 3 o'clock or 4 o'clock. So I think it's still got a little bit more of a downturn to come. So basically, that's when an investor would usually make the most of that opportunity. It's basically the perfect time to be buying a property. Yeah, I mean, it's a little bit different if you're selling and buying, you're in the same market, so it doesn't matter. But if you're just looking to leverage and buy an investment property, now's a great.
Okay, and then obviously we know that the next cycle, whether it will eventually come. But one of my friends, Chris Gray, he looks at it from a macro point of view. He doesn't even worry about sort of cycles. His philosophy is property tomorrow is always more expensive than what it is today. So the sooner you can buy, the better, whenever that is. And so, because we know that it's a cycle, and all things, go down eventually, and then all them go up. The sooner you can get in, the better. All right, let's quickly wrap things up. We've spoken about, I just wanted to quickly touch on, we can't spend too much time on this, but there are some incentives right now for, especially in Australia, and there's probably different incentives in New Zealand, government incentives to help people in order to invest. Tell us a bit about, just very quickly, some of those things that are available, and how do people get more information?
Okay. So this is, at the moment, there's probably the last couple of years, there's probably the most government incentives that I've ever seen, and I've been doing this for 18 years. So there's some really good things out there. Obviously, the government is trying to stimulate the economy, and they are really trying to help first homeowners. So there's a few good federal packages that are available at the moment, and federal means it's Australia-wide. So the first one is called the First Home Guarantee Scheme, or it used to be called First Home Loan Deposit Scheme. I don't know why they changed the name. Anyway, in this scheme, what they're trying to do is they're offering to first homeowners the ability to only need a 5% deposit. Now, normally, if you're only paying a 5% deposit on a property, it means you're leveraging 95%. And if you go over 95% of the value of the property, and if you go over 80%, there's usually this fee called lender's mortgage insurance. And it can be quite heavy. It can be between $8,000 and $15,000. So what the government's doing is they're saying, look, you only need a 5% deposit, and we're going to guarantee the bank. And so the bank doesn't have to take out this lender's mortgage insurance policy against you, and you don't have to pay that fee. So it's helping them only need a 5% deposit and saving them on that fee. Now, there are only a certain amount of spots in this scheme, and there's only a certain amount of banks that actually have been offered this scheme. So, for instance, CBA and NAB are the two majors that have it. So talk to your broker about that. They'll know what banks have it, and they'll also know what banks still have any spots available. But that's a really good one for federal. There's a second one that's available, and it's for single parents that they may have owned a property once upon a time. So it's not for first homeowners. It's basically they're renting at the moment, and it's trying to get them out of that rent rut. So, and trying to get them into their own home. So what this offer is by the government is that you only need a 2% deposit, and there's no lender's mortgage insurance fee either. They will guarantee you for the bank. And so there are, policy restrictions. I think you, as a single person, you can't earn above 90,000. So it's not for it's not for wealthy people to be able to use this scheme. It is targeted for those struggling to get out of the rent, the consistently having to rent. So that's a really good federal one. There's several. I've got some really good ones for New South Wales as well, but I know our audience is national and New Zealand, so I won't go into them. Once again, reach out to your broker. They'll know all about the different incentives for. They're all mainly for first homeowners.
Fantastic. Okay, so make sure you talk to your broker about what's available, either for you or if you're not a first homeowner, maybe your kids as well, or anyone that you want to help in your family. These opportunities won't be around forever. So thank you for that. And just to kind of wrap things up, I want to quickly talk a bit about tips for scaling your portfolio. So if you've got one property, great, but how do you go to 2, 3, 5, 10, etc.? That's something that you've helped us to do, and also have done yourself as well. So what are some tips around scaling your portfolio?
Yep. Okay, so the first tip is the first thing we look for is equity in a property. So with your first property, you need to build some equity so that you can leverage for the second one. So how do you build equity? You can pay down the home loan, you can have capital growth so the property increases in value, or you can renovate the property. You can add wealth to the property. So that's the fastest way to obviously build equity. Once you've built equity in one property, we can use that equity for the deposit to go for your next property. And we basically just duplicate that and roll out as quick as you're ready to roll out. So that's how we use equity in a property, which is one side of building a portfolio. The other side of it is you still need to service for the lending that we're getting you. So I say to some clients want to become professional investors, and that's all they do is they just want to build their property portfolio. But we need a wage, we need an income, because just the rent of a property does not service for a loan, because the banks will scale the rent to 80%, and then we've got to add rental expenses, and so it's not going to service it. So you need to upkeep your income. So there's two sides of it. There's the equity that we can use to leverage, and then we need income to service for the loan.
So basically grow your business, pretty much.
Yep.
If you're a Blueprint member. Yep.
So keep growing your business, and then there's just a few other tips that I use with my clients that are building a portfolio. I diversify with banks. So
tell us about that.
Yeah, so I'll only put 2 properties per bank. And then I'll go to another bank and put 2 properties with the next bank. And the reason we do this is it provides you flexibility within your portfolio. So you don't want one bank making all the decisions for you. So if you've got a very large portfolio, I'm happy to put 3 in with one bank. But other than that, we call firewalling it. So that if one bank says no to pulling out equity, hopefully we'll get a yes from the other bank. So you need to diversify your portfolio.
And negotiating. Talk us a bit about that as well. Because I know this is a service that you offer to your clients. Most people never do this. They just get a loan and, have it for the next 20 years.
Yeah.
But everything's negotiable. So tell us about what you do for your clients and what other people should be doing themselves.
Yep. So when we're negotiating with a bank, first of all, every interest rate that we are applying for a client, we negotiate. So we're lodging in and saying, hey, Westpac can offer this. Can you match it? So we're negotiating price. We're also making sure that any of the policy that the bank has fits the client before we move that portfolio to that bank. So for instance, if I've got a client that I know I'm buying for instance, what I'd call it strategies. If I've got a client, I know they're buying a property, but the sole purpose of that purchase is to subdivide and build at the bank at the back. I want to put them with a lender that has a really good construction policy. So we're forward thinking with where we're putting their portfolio, or we want to put them with a bank that will let them use the net profit in their business so that they continue to service for the second property when we're leveraging it. So negotiating with the bank, reviewing their policy.
And what about refinancing and also renegotiating existing loans? Tell us a bit about that.
So we will always try and renegotiate existing loans, and we look at our clients' loans every year, annually. So we get a prompt from our database, and we'll try and negotiate our clients' loans every year, and every broker should do that. And actually, just you are with your own home lending, if you don't have a broker, you should every 6 months to 12 months be ringing up your bank and saying, hey, what can you offer me? And so make sure that you're doing that. We do that for our clients. And so with the refinancing, the trouble is we're trying to get the best rate we can, but the trouble is there's this old money versus new money. So they're not making as much money on you, an old faithful client, that they are with the new clients coming in. So sometimes it's actually hard to match the same rate that we're being able to negotiate for a new client. So in that instance, we're not faithful. We're like, we'll just refi you. If you're not going to give it, but a new bank over here is, we'll just refi you. So we try to negotiate our hardest. And at the end of the day, if the bank doesn't give us what we need, there's no allegiance to banks anymore. They really are a tool that we use to get what we need.
Fantastic.
That answer.
It did. So final tips for scaling, or otherwise, if you feel we've covered it, just final tips for what we really want people to understand in order to grow and build their wealth.
Okay. So first of all, first tip, I just mentioned it. Ring up your broker and get them to reprice any of your variable rates. Ring up your bank if you don't have a mortgage broker, and ask them to reprice your rates. We're doing it with our clients. Sometimes we're achieving 1%. So that's something you can do right now.
They can be tens of thousands of dollars, hundreds of thousands.
Yeah. And honestly, we're just getting all of them reduced. So they're really keen to do it, and they're keen to keep your business. Threaten that you'll move to another lender so that they'll go into retention mode and hopefully offer you a really good rate. Second one is, if you're looking to do anything, refinance, pull out equity for a renovation or even a purchase in the near future. Obviously, if rates are going to go up, the sooner you do it, the better, because your servicing is going to drop with every 0.25 interest rate hike. What would be my third tip? I guess stay in close contact with your broker. They really are like a personal service to you. Just like your accountant, you can ring up and ask a question. Hey, can I use that car as a tax deduction? How does that work? Your broker's exactly the same. We're literally in your pocket. You can ring me up and ask me anything finance. Do you think I can afford another property? What's your view on buying an SMSF property, Kathy? What's the pros and cons? They're a finance advisor that should be able to answer all of those questions that are running around in your head, and give you clarity to help you with that next decision. So have a good contact with your broker.
Fantastic. Thank you. So many great tips there. All right, we're going to wrap up this session right now. Big thank you to Kathy for joining us. Big round of applause. Yeah. Thank you, everyone. And we'll see you again soon.